Good morning, everybody. Thank you so much for joining us today. This is the Dominion Payroll twice monthly HR Matters webinar. It is Wednesday, May 12th, and we're going to cover a lot of ground today. So grab some coffee or your beverage of choice and buckle up for a wild ride through all sorts of different topics. As you can see here on the screen, we're going to touch on unemployment benefits and work search requirements that our states are reinstating. We're going to talk about two of the programs in the American Rescue Plan Act, the COBRA premium subsidy and the paid leaves for COVID-19 illness and vaccines. And then at the end, for our friends in Virginia, we're going to talk about the Virginia Overtime Wage Act, which will go into effect on July 1st and affects salaried non-exempt employees. And so we'll talk about that calculation. As always, we will take your questions and using the Q&A section of your screen. Please avoid the chat if you can. The Q&A section allows us to record your questions and look at them after the fact. And you can submit questions anytime during the big broadcast here. Sometimes we take them while we're on that particular slide, and sometimes we wait till later. It's anyone's guess. It'll be a surprise. All right, so with me today, I'm so pleased to have my friend Kevin Wilson with me. Hi, Kevin.
Hey there, Leslie. Good morning.
How are you?
I'm doing great. It's a good Wednesday, and I'm really excited to be here on HR Matters with you today.
Thank you. Kevin, do you have gas in your car?
You know what? I just saw that a consumer agency for the federal government had to tweet out, "Don't put gasoline in plastic bags." So
oh my
that
gosh,
is affairs right now on the East Coast.
Wow.
I think I've got about a quarter tank, and I'm not panic buying. I think it's going to be okay.
Okay, good. Yeah, I did see some long lines on my way home from work yesterday, so I decided to opt out and just see what happens. And also with me we're also really excited to have Mark Brickey from the Virginia Employment Commission. Hi, Mark.
Hello. Good morning.
Welcome. I know you are a repeat listener to the webinars, and this is your second time actually guesting on the webinar. So thank you again for coming back.
Thank you. Always an honor.
And your continued support. Mark knows that when the origin story here is that Mark has been helping us sort of learn about and decipher the COVID era unemployment benefits since March 2020. And occasionally he'll email me something that the agency is trying to get the word out about. And so a couple of weeks ago, he emailed me about Virginia is reinstating the work search requirement for those on unemployment benefits. And so, of course, poor Mark, I responded and said, "Hey, do you want to come on the webinar and talk to people about it?" And he was like, probably regretting he sent me that email. But anyway, we're so happy to have you, Mark.
Likewise, thanks.
So we'll get started with unemployment today. We're going to touch on the work search requirements. If you have any other questions about unemployment, we may or may not be able to answer them. But we thought it would be important for you all to see some of to talk about some of the things that are happening in that area. As we all know, the labor market is kind of in a weird state. And I've heard anecdotally from a lot of you that you're having trouble finding workers, which we're not going to solve that here today. But I did think that this would be important information in light of those conversations. So why don't we just dive in? Also today, you guys, I went a little crazy with stock photos, and this is my favorite one, the unicorn. So I thought it was fitting for an unemployment benefits slide. We're gonna dive into the actual work search requirements. So Mark, can you tell us a little bit about work search requirements? This is a pre-COVID standard, correct, for each state?
It is. Yeah, I can go into that detail for you.
So yeah.
Sorry.
No, go ahead.
Yeah, so with the job search, the work search requirement, and I'll start from the beginning. I know this may be elementary for some. You may already be familiar with how it works, but I think it's best if I explain it in pre-COVID terms and then post-COVID terms, because so you can really understand what we're communicating here. So imagine, take yourself back, close your eyes and go back to a few years ago, pre-COVID. It's hard to believe as it may be, there was such a time. But let's say it's 2019 and you've been laid off, and you go to file your unemployment claim. And let me back up a little bit. So I am speaking specifically in terms of Virginia. However, I will say that a lot of what I'm saying that we do in Virginia is very similar in other states. And in most cases, it's similar, but there might be some slight tweaks, like amount, like say 2 job searches per week in one state. It may be 4 in another, it may be 10 in another. So there are a lot of similarities in whichever state you are tuning in from. But anyway, back to my story. So let's say it's 2019. You've just been notified that you're being laid off. You come to your last day of work, you go to file your unemployment claim in Virginia, of course. So you file your claim. And one thing that is expected of you in 2019, again, that's where we are in this story. One thing that's expected of you is for every week that you draw unemployment compensation, you are expected to show proof of at least 2 job applications or resumes or submissions. Now you can do as many as you want. Like you may have applied for 10 jobs that week, 20, 50, 100, however many. But Virginia just requires you to show proof of 2 of those. Now, with that in mind, let's jump forward to March of 2020. Well, when COVID hit and we were just starting to learn about it, and it was all so new to us then, we're trying to figure out what's going on, what's the best thing to do, what should or shouldn't we do. The decision was made that the job search requirement would be temporarily suspended, so you could file your unemployment claim and you would not be required to submit those 2 job searches, the proof of those 2 jobs that you applied to submit your resume for. And that's not to say that if you wanted to look for work, you couldn't, because you certainly could. We just didn't require that. It was temporarily suspended because at that point, we did not know, is it the right thing to encourage people to go back into buildings and facilities where you may be on a production floor with 100 people, when we're hearing that this virus, its characteristics. So temporarily suspended. At such time, it was determined we'll reevaluate this in the future and we'll reinstate it. Well, we've come to that time now. And as you see on the slide here, in Virginia, so the week of May 30th, for unemployment weeks, we look at the calendar week. So May 30th is the week ending June 5th. So for that particular week, anyone who files his or her unemployment claim will be once again required to show proof of at least 2 job searches, applications, resume submissions for that particular week. And if he or she does not do so, will not be able to draw unemployment for that particular week. So the good thing, and I know we have a large employer audience now. So we've been hearing, and a lot of you will probably shake your heads at this. You're saying, well, we can't find candidates. We have openings. Well, we cannot find enough candidates, qualified candidates, which conventional wisdom would normally would indicate that when you have a high unemployment rate, you're going to have a larger labor market of folks looking for work. And it seems backwards now, because that isn't the case now as it would have been in the past for various reasons. And I know a lot of employers, it's not for me to speculate why people decide not to look for work. Some people say, well, they may be receiving more in unemployment than they were working. Others say, well, they can't find health care, so they're not going to look for work because they can't not be home, or childcare, sorry, not health care. They can't not be home to be with their children. And others, it could be fear of the virus itself and going back into a facility, or just an audience or the public, a large group of people. And like I said, it's not for me to speculate why, but the good thing is it does appear that you can, some anticipate that with this reinstatement of the work search requirement, you will see more candidates, which makes sense. If the requirement is back in place and people want to receive their employment, then of course they will be looking for work. That being said, though, it will be quantity maybe not necessarily quality in terms of, let's say you are a manufacturer and you have positions out there, you might get applicants to your jobs, but who's to say if it will be folks from that industry or who have those skills. But the way I like to put it, it is a rising tide. So there should be, quantity wise, we should see more applicants, and we're hoping that's good news for these employers, that you will see some candidates come in. So that's how the job search, the reinstatement of the job search requirement works. So I would say beginning week ending June 5th, be on the lookout, because we're hoping that will increase the pool, the candidate pool. And my advice would be, make sure you post those jobs, put them on whatever platforms you're used to posting your jobs on. I know in Virginia, we have the Virginia Workforce Connection, which is vawc.virginia.gov. That's V as in Victor, A as in Apple, W as in Walter, C as in Charlie, vawc.virginia.gov, where you can post your jobs, your positions there. But that would be my advice to the employers. And you see the dates here for some of these other states. And if you are one of those other states, I would advise you to do the same there. So that's, in a nutshell, that's what the reinstatement of the work search requirements means, and what we're hoping that will result in, and how that can help you find more candidates.
Thank you, Mark. That's really helpful. It's good context, and you're right. We can't predict the future, and we cannot speculate why people aren't, why these, where people are in terms of their job search. But certainly this year is going to be sort of a interesting market, but this hopefully can only help employers. And I just picked some of our larger markets here. If you are unable to locate if your state is not on this slide and you're unable to locate the status of the work search requirement, you can email us at questions@dominionpayroll.com and we'll research that for you. We do have a couple good questions for you, Mark, if you're ready to provide some answers.
I am.
Okay. Doris asks, do you have to accept any job offered if on unemployment in Virginia?
Well, good question. It's kind of tricky. You don't have to, it has to be suitable employment. And some people say, okay, well, that's a gray area. What's suitable employment? It has to be within reason of, say, what you were and what you're looking for. Because when you file your unemployment, of course, you make a note of what you're looking for, job search wise, what kind of jobs you're looking for, around the pay range, what your skills are, what your background is, what your experience. If out of the blue, you get offered a job, say, let's say you're making $20 an hour, and there's a certain range that you're used to making and what you're looking for. And out of the blue, you get offered a job, a minimum wage now at something that's completely separate from what you have done and are used to doing. And one key point here I would like to make is that if you don't apply for it, so when you have those 2 job search contacts per week, make sure that they are the jobs that you apply for, make sure they are jobs that you would accept. And there could be a variety of reasons why people apply to jobs they wouldn't accept. Maybe they've come to the deadline and like, uh-oh, I got to get a job search in because I've got 5 minutes until midnight and I better get it in. And you throw anything and everything in there. Well, I guess Murphy's Law, maybe. Of course, that's going to be the one you get offered the job for. So make sure whatever jobs you apply for, they are jobs that you would be willing to accept and work. And that's my advice there. But generally the answer is no, you don't have to accept any, and I'll use that term loosely, any job that's given to you. But if you did apply for it and then you turn it down, that could be reason to certainly that you could be noted on.
Okay.
That's really helpful. I've always been sort of confused about this aspect of the work search requirements. So thanks for that, Mark.
Yeah, well, and actually another example that I'll use, like whenever I do my briefings, I'm the rapid response coordinator. I'm the rapid response program, and we do briefings to employees who are being displaced and laid off, and we kind of coach them and help them understand the whole process. And one example I use is like, say you apply to a job at XYZ Corporation, and it might be for a product analyst making $25 an hour. Well, they come back with a response saying, hey, this is HR, this is the HR manager from XYZ Corporation. We know you applied for this job making $25 an hour. Sorry, we've already filled that position. However, we looked at your resume. We think you'd be a great fit for this other job making $10 an hour. Well, that's not the same job you applied for. So that would be an example of, that could be kind of a tricky one, because you're like, well, this company offered me a job and I applied for a job. Well, it's not the same job. It's significantly less than what you were making. And that's kind of some of the particulars that you would want to look at there.
That's interesting. Yeah, I didn't know that either. So thank you for clarifying that.
Sure.
Okay, and the next question is something that I'm hearing from clients. Anonymous says, we are receiving applications, but a lot of the applicants are not answering our calls or not showing up for the interviews. How will the VEC know if claimants have been called for an interview or offered a job and they decided?
Yeah, that's another trick. And there are some tricky ones out there. And thanks for your questions, by the way. That just kind of keeps us on our toes. So that's the kind of thing, if that individual who is applying for that job gets audited, and anyone who is filing a claim and they're submitting the job search contact, they're subject to audit, just like say you would be for your taxes. You may be picked, like the IRS may say, we're going to audit this person. If you're contacted and say, hi, we were just checking a claim. Hi, I'm with the VEC. I'm calling to see if John Doe did in fact apply for this job, and was he or she offered this job. Make sure you let them know, yes, we did extend an offer. We tried to extend an offer. We didn't get a response, just so that we will know those things. It's good that we can have those things communicated to us so that we'll know what's going on and that we can address them and handle them.
Okay, thank you. And we've actually, the next slide, I've put up some specifics from the Virginia work search requirement. This is what you sent me. Oops, sorry, cat on the keyboard. This is what you sent me, Mark, a couple weeks ago. And so I wanted to put this up here in terms of sort of the process piece of things. And then we do have another question. This one is from Diane, and she says, is the work search required for employees filing for partial unemployment benefits whose employer has suffered a substantial lack of work?
Ooh, all right. So repeat that question, please.
Sure. For employees filing for partial unemployment benefits, do they have to, does the work search requirement apply to them as well?
Partial, as in the individual was.
Looks like this one's saying that there's reduced hours.
Okay, so if it's reduced hours, that would mean the individual is still working for that particular employer, and I'm glad that was mentioned too, because individuals can apply for unemployment even if their hours were reduced and are still working. I don't know an exact answer to that. It actually does still. I'm sorry. I have some colleagues who I've asked to listen in and text me if they know answers to certain things. And I was just notified that, yeah, you do still have to do a job search if you are in partial unemployment. So that is still a requirement. And just follow the prompts. Once it asks you, you will be asked. If it asks you to do the work search, then of course you will need to submit that. But yes, you would still have to do a work search.
Okay. And what I have on the screen here, like I said, is specific to Virginia, but if you're not in Virginia, I'm sure you can find on your respective Employment Commission website something similar, but these are the process pieces now for folks in Virginia who want to file claims. And beginning the week of May 30th, they have to report the 2 job contacts a week. And here's the way they do that. And then the next piece of it, responses to blind ads for jobs or openings are not acceptable. Blind ad would be any job announcement or advertisement where the name of the employer or company is not provided. And then the final piece is, here is the type of information that you must retain. Again, in Virginia, I'm assuming there are similarities across the states, but in Virginia, you must retain as much of the following information that you have regarding a job contact for 1 year, because the VEC can request it at any time. anything to comment on here, Mark?
No, I think this is pretty thorough. This was provided to me by our Deputy Commissioner, Jason Brown, and thank you to Jason for this. And he did say, let's share this with individuals like you have done, and we appreciate you sharing this. But yeah, this is for the most part, this is pretty clear, pretty detailed as far as what the individuals need to do. If they do have any questions, they can certainly reach out to us on the contact information that was provided within it, and we will help them as best we can.
Leslie, if I could just jump in real quick, I just would want to share anecdotally. When I had early in my relationship with my wife, she got laid off from a laboratory job and ended up going on unemployment while she was, searching for the next thing. And this whole the record requirement here really sort of saved us just in terms of taxes and fear of being audited and everything that sort of goes into this. We're pretty meticulous about just throwing this stuff in a little file folder. And I would just recommend to anybody out there that it may seem a little onerous at the time, but you'll be so grateful if, whether it's the VEC or the IRS comes a calling about whether it's work search or unemployment, how much money you've received. Just try and keep good records. It's not going to hurt you to have that stuff sitting in the back of a closet somewhere. So I just wanted to share that with everybody.
Good advice. We have a couple questions here from Greg that are pretty specific to his situation that I think what I'm going to do, Greg, and he's talking about from the perspective of the reports of separation from the VEC. Greg, could you email your questions to questions@dominionpayroll.com, and I'll get them to Mark, and we'll get you squared away, if you don't mind. That'd be great. And Anonymous asks, Mark, have you heard of an increase in fraudulent claims being filed on an individual by someone else in Virginia?
We have heard that there have been a lot of, and you may have seen on the media, on the news as well, but that there have been a lot of fraudulent claims, lots of fraudulent claims filed on behalf of individuals who were not those individuals. And unfortunately, that's kind of the nature, in society, we see that. But there are folks out there who want to take advantage of, opportunists is the word I use. But yeah, we have seen a lot of that, and we do our best. We do our best to fight that battle as best we can, to look out for the individuals that we serve. But if you do know, if you have heard, or if you do suspect that you are a victim of fraud, then please do report that to us, and we'll pursue it as best we can.
Okay, I'm going to take one more question on this topic, and then we'll keep moving. And I don't know if you're able to answer this one, and feel free to say so, but Rose says, we have employees who are constantly calling out so they can continue to claim partial unemployment. Will the VEC start checking with employers if the claimant have worked all available hours?
That is a tricky one, and there are a lot of specifics in that it's hard to say. But if someone, when I looking back at the basics of it, of course, unemployment is when someone is not able and available for work, and if someone calls out, then that's the term we like to use is no fault of their own. If they're calling out, and again, I don't want to question why someone's calling out, but that wasn't that someone was laid off or displaced or had reduced hours by the employer. So that would be a separate, that's tricky, because there are a lot of particulars in that sound like it's not relevant to unemployment if it has to do with someone calling out. I can't give an exact answer on that, but there's just there's some particulars on that would need some more, that the employer would need, I guess, to be more specific about, and maybe talk with some of the VEC, because that's a tricky one.
Would they, is there a place they should go? Is there a pretty clear contact page on your website where they can go for employers?
I would say, well, check our website, vec.virginia.gov. And again, that's just for Virginia. But there, you should find where an employer can contact the VEC, and for fraud too. I know we had a tab on there where individuals could report fraud as well. But that would be my advice. Unfortunately, it wouldn't be myself, but yeah, or if you have a client that does send you, like you were saying, Leslie, if you have a client that sends you a question, say particular to the VEC, and you wanted to send that to me, I can do my best to make sure that it does get to the right individual or department that can address that, and try to help you with that.
Okay. And I know this question makes me think of another question. So last summer, I believe, when we were in that thick of it, you all had a form where employers could report employees that were offered to return to work and refused work.
Yes.
Is that sort of in the same vein of what we're talking about here?
To a degree, I would think it would be. Again, it depends on how you look at excessive calling out and refusal to work. But I would think it sounds like it's in a similar group. And of course, outside the VEC, I would say that the employer might need to have that kind of discussion with the employee first. But yeah, if it's excessive and the employer has concerns and reason to believe that there might be more than meets the eye, then it does sound like it would be in a similar category as to that. And that was, and as far as I know, that page is still on the site where the employer can report that.
Okay. So Rose, that might be a place to start if you want to try and, if you suspect that this is what's going on. I don't know that the VEC would be able to start checking with all employers about these types of specifics, but if you raise the flag, then hopefully you can get something ironed out. Okay. Well, Mark, thank you so much. I really appreciate you taking the time, and I know you have some colleagues listening, and we appreciate their time as well. You're welcome to hang out and mute and listen to the rest, or you're welcome to get back to your day. And if we receive any questions after the fact that we can't answer, we'll pass them along to you.
Great. Thanks, Leslie. And thanks for all you do. I've learned a lot through your webinars over the last year, and I'm sure a lot of other folks too. And you're a great resource. And yeah, any questions, please send them my way.
Oh, thank you so much. We've learned a lot as well.
Oh, it's good to talk with you, Mark.
Thanks, Kevin. Take care.
All right. Moving on. I promised more fun photos, guys, and they're coming. We have a lot more to cover. I'm going to try to cover it all. Kevin and I will try to cover it all before noon. If not, well, even if not, even if we do, we will post this, the slides and the recording on our website on the COVID-19 page by close of business today. So as always, these slides are very text heavy, and that's because we want this to be a resource after the fact. So apologies in advance, but I have tried to counter the text this time with some fun photos. So hopefully that'll make it a bit more palatable. All right, so the first topic I'm going to cover, and I've covered it before, paid leaves for COVID-19 illness and vaccine now. So as you all might have already heard me talk about or read somewhere else, the American Rescue Plan Act, which was signed in March, provided for continued paid leaves and employer tax credits April 1st through September 30th. They are not mandatory as they were in 2020. They've never been mandatory in 2021, but they are a really great option if you have employees who should or need to be out of the office due to the COVID-19 virus, if they're ill or been exposed or awaiting a test, or, and this is new, if they are seeking a vaccine or need to recover from that. And we'll talk about that more in just a second. So that's still an option. And I have clients who still have people who are getting sick. It's definitely a lot fewer than before, which is awesome. A lot of clients now are wanting to incentivize their employees to get the vaccine. And if they can provide 2 hours of paid time off on a Wednesday to do that, and then potentially some time on the next day, if that person is suffering side effects, you can be compensated for that time that employee is out. The employee feels good, you feel good, you get the tax credit, all is well. Just a quick reminder, the virus is still with us and not everybody will be vaccinated. So you do have a general duty, you do have to comply with the OSHA's general duty clause, which says that you have the responsibility to provide a safe and healthful workplace that is free from serious recognized hazards. COVID-19 is a serious recognized hazard. So these paid leaves continue to be in place so that you can fulfill this commitment.
Hey, Leslie, can I ask you a quick question? Really just sort of trying to boil down the previous slide for, small business owners out there. What does that process look like? Say, I own a small restaurant. I say, you know what, guys, I'll give you however long you need PTO to go get a shot. How as I, the employer, how do I recover that money? Does that go through 941 like that? What's the process?
Great question, Kevin. I'm glad you asked. So it's a real-time tax credit unless unless the credit that you need is more than the payroll taxes that cover it. So essentially what you would do, and I'm glad you brought that up because for those of you who took advantage of the paid leaves prior to April 1st, you and you're our clients, you had separate earnings codes for these leaves set up in ISOPs, and we set them up for you, and then you would use them when you ran payroll. Because the taxability of the new ARPA era paid leaves is a little different, we have to set up new codes. And so what you would do if you want to take advantage of this or just want to be prepared, and you're one of our clients, you would email customer service at dominionpayroll.com and say, I'd like to have ARPA paid leave codes set up going forward so that I can realize the tax credit. And it's my understanding that once you run a payroll and you've got Leslie Bruno as 2 hours coded for the separate earnings code for paid leaves, some of your in real time, once that's run, we defer the amount of taxes from payroll back to you. Sorry, I'm not using the right terms. Instead of sending 2 hours worth of wages, worth of the equivalent amount in taxes to the IRS, we credit it back to you. So it's real time. If say someone's out for a much longer time and the tax credit is a little bit higher and it exceeds the amount of the payroll tax available for that payroll run, then you would see that on your quarterly statement, or you would work that out on your quarterly statement. I hope I've answered that right.
Yeah, no, that makes sense. Yeah, the fact that is happening in real time as you're processing payroll. That I think as any employer out there, it's like, hey, I want to do the right thing, but if it's going to screw with my cash flow for a quarter or a year, that could be a disincentive. So it's great to learn that is happening, with the quickness.
Yeah, it is in real time, unless there's a excessive amount of hours that need to be accounted for, and then the math might work out that you might have to wait for a part of it. Right. And hopefully now we're in a phase where we don't. I mean, back in 2020 and even parts of early 2021, people were definitely taking off time to recover, and so now that time is still there. The taxability has just changed. I think now it's just coming out of Medicare and not Social Security. So, but it is in real time, so you don't have to worry about having the sort of gap in your revenue there. What stays the same is still applies to employers with fewer than 500 employees. Benefits should continue during paid leave, so you'll continue to you wouldn't suspend benefits for that employee. The benefits are also included in the compensation. So it's not just wages, it's also benefits. If you, any employer paid benefits, basically anything that you would pay on behalf of that employee during that time that they're on paid leave for COVID-19 will be reimbursed to you. You shouldn't discriminate or otherwise retaliate against employees who take paid leave. If you're going to offer it, you should offer it to everybody, and then don't make people feel lousy for taking it or otherwise discriminate against them in terms of their position and their role. Like we just said, tax credit occurs in real time via the payroll process, and you'll just need to have separate earnings codes set up. And even if you had them set up before, you need new ones now for post April 1st. There is a cap on the tax credit. So if some of your more highly compensated employees take these leaves, you might not get all of it back. The tax credit is either, the cap is either $200 or $511 per day, depending on the qualifying reason. And I will talk about that in just a second. And that's for emergency paid sick leave, which is the 2 weeks, the initial 2 weeks that is referred to as EPSL or e-sick. And I'll talk more about that in a second too. And then the other piece of it is EFMLA, which has a tax credit of $200 or cap of $200 per day. And then you should allow employees to use this before PTO, which makes sense because you're paying for PTO and they should use this leave first because you're not paying for it. Okay, emergency paid sick leave has been everyone's balances has been reset. So if you'll recall from 2020, the initial emergency paid sick leave was every employee, full-time, part-time, and seasonal of companies with fewer than 500 employees, they were entitled, like federally entitled to an equivalent number of hours that they would normally take in a 2-week time. So if they're full-time salary, that would be 80. If they work fewer than 40 hours a week on a variable schedule, you would go back, maybe take a 6-month look back and average that out. Or if they're part-time, then maybe it's 40. And so it wasn't 80 hours for everybody. It was the equivalent of 2 weeks worth of work for them, for that particular employee. Regardless if that person used any of that leave before April 1st, as of April 1st, everybody's balance is reset for EPSL, which is that 2-week period. And that's that critical first, that was originally established by Congress because 14 days was the magic number throughout 2020 for quarantining and making sure that people weren't contagious. Whoops, sorry. Again, cat on the keyboard. Sorry, guys. So EPSL, you can take it. The new thing is that it explicitly states that you can take it when you're seeking or waiting for a COVID-19 diagnosis or test results. The first legislation didn't say this explicitly, but we inferred or interpreted the guidance to mean that if somebody was home waiting for a test, that they were eligible for paid leave. Now they've actually said it. I think it was just an oversight in the first bill because it was early on and people, Congress didn't quite know how this was going to play out. And like I said, everybody's eligible now from April 1st through September 30th. And the law explicitly says that you cannot provide EPSL in a manner that favors highly compensated employees or full-time employees, or that discriminates based on how long employees have worked for the employer. So just be real careful about that. You don't want to get in hot water. If you're going to offer it to one person, offer it to everybody. And don't discriminate against them if they need to take the time off. Okay, so EFMLA, if you recall from the initial legislation, was 12 weeks, first 2 weeks unpaid of leave for people who had one qualifying reason, and that was childcare. If you had a child at home because their school or daycare was closed due to COVID, you could take time off at 2/3 your regular rate of pay. The employer would get a tax credit. Now they have gotten rid of, the big news is that EFMLA can be taken now for any reason other than, in addition to the childcare reason. So that includes if someone's sick, thinks they're sick, or they're getting a vaccine. Now I can't imagine someone would need to take EFMLA for the vaccine because you would take emergency paid sick leave from the previous slide first, and that's 2 weeks. And so hopefully that's sufficient. But they've gone ahead and they've kind of simplified it by saying that the eligibility reasons are the same for both these types of leaves. EPSL would come first, and then EFMLA if somebody needs it. So childcare still applies. If, God forbid, somebody is a COVID long hauler, you would use it for this. the first 2 weeks are now paid. So now it's a full 12 weeks. And the maximum reimbursable tax credit has increased to 12,000 total for that total period from 10,000. So that equates to $200 a day. I'm still waiting for news, and maybe if somebody out there has more information than I do, but the law itself isn't clear as to whether or not everybody's entitled to a new 12-week bank of EFMLA, just like it is clear about the 2-week bank for EPSL, but not about the 12-week bank. I'm assuming it is if they've gone ahead and gone to the trouble of now saying that the qualifying reasons are the same for both. So if you have a situation where you can see that an employee needs more than 2 weeks and they might need to bleed into the EFMLA time, I would consult an attorney or an HR professional or send us a note and we'll try and work that out. But labor hasn't come out with any guidance on ARPA in terms of this piece of ARPA. And but I'm assuming that that's still there. And another note that we don't really know is if somebody took EFMLA last year because of the childcare reason, are they entitled to it again this year for the same thing? And I know that not every school is back in session, or there might be a hybrid situation where kids are in school a couple days a week and home the other. Childcare is still a big deal. EFMLA can be used in an intermittent fashion to help your employee manage that childcare situation. So that hasn't changed. That's still the case. It can be used intermittently. We do have a new, on the COVID-19 page on our website, we do have a new updated ARPA era request form that employees can use to request paid leave. And that's a handy way for you to document the leave in that way. And I would file that away and keep it on file for 6 years, just in case the IRS gets a wild hair and wants to audit people around these tax credits, which I'm sure unless you're some sort of egregious user of them, I'm sure probably won't happen, but who knows? Okay, and again, this quick caveat, this is actually written into legislation itself. You may not provide EFMLA in a manner that favors highly compensated employees or full-time employees or tenure, based on tenure. Please be consistent and then allow them to use EFMLA before using any PTO that they've accrued on your plan. All right. The qualifying reasons. So for EPSL, the qualifying reasons have always been the same and they continue to be. So these are the reasons here why somebody could qualify for emergency paid sick leave, which again is that first 2 weeks or up to 80 hours. The new explicit reasons are in sort of this light pink color here: seeking or awaiting the results of a diagnostic test because they have been exposed or because you have asked them to get a test or a diagnosis. And then the big one now is obtaining the vaccine or recovering from any related injury, disability, illness, or condition. So a lot of my clients have been taking advantage of this as an incentive to get folks to go and get vaccinated. And of course, if they have any side effects, they just give them the day off the next day and then go from there. The last 2 reasons are about caring for another person. So these are only paid at 2/3 the regular rate of pay. So a good way to think about it is the first 3 reasons are self-care. Something's happening to you, your health might be compromised, or you're getting the vaccine. The last 2 reasons are when you're caring for another person or you have a child at home. And these are paid at 2/3 the rate of pay. So again, these are the qualifying reasons now for EPS. They've always been the qualifying reasons for EPSL. Now they also apply to EFMLA. So you would use EPSL first because these first 3 reasons are at 100%. And so you would get a higher tax credit. The last 2 are at 2/3. I hope that makes some sense. Okay, and then the tax credit piece. Like I said, the taxability has changed a little bit. The dollar amounts have pretty much stayed the same, but the payroll taxes that are used to offset this expense for you have changed a little bit. So if you are one of our clients, or even if not, email your payroll company and ask them to set up separate earnings codes. So here is another way of saying what I said on the last 2 slides. The tax credit is available when used for reasons 1, 2, 3, or those are the self-care ones for up to 100% of an employee's regular pay with a limit of $511 per day. And then those reasons 4 or 5 on the second bullet there, caring for another, they get 2/3 of employers, they get 2/3 of their regular rate of pay with a limit of $200 per day. And then if they do need to take EFMLA, which is sort of the second option coming after EPSL, any reason that you take EFMLA, it's 2/3 of an employee's regular pay with a limit of $200 per day and a cap, a total of $12,000 per employee. All right, so that is paid leaves. I think I have one question about that.
Yeah, would you like me to read it for you?
Yeah, go ahead.
Okay, so Rose asks, if an employee is moved from a part-time to a full-time position a month ago and now needs to take paid sick leave, do we average out the hours for the last 6 months, or does the employee now qualify for 80 hours of paid sick leave?
That's a great question, Rose. It's my understanding that if they're full-time, even as of just yesterday, that they are now eligible for the full amount of emergency paid sick leave, which would be 80 hours if that means full-time at your company. Does that make sense? So, and I say that because in the original law, there was no waiting period. There was no real condition for employees to really not qualify for, if they're full-time right now, when they need it, then they get full amount of hours. So I hope that makes sense. I mean, the whole point is, when they wrote this legislation, the whole point was to keep people isolated from other people. And so, if that meant a full-time person needed to be out for a full amount of, for 40 hours a week, then the government is saying, please let them do that and we will reimburse you for it. All right. So the next.
It's important to go out of our way to just let everybody know that Dory says that Dominion is amazing, and we need to acknowledge that Dory is amazing.
Yes. Thank you, Dory. That's very nice. All right. I know we're running kind of late, so I'm going to roll through COBRA premium assistance, which is the second ARPA initiative that we're covering today. And you guys might know, we're kind of late in the game on this one. We covered it when it first came out, but essentially the American Rescue Plan is providing premium assistance to people who are eligible for COBRA. And the assistance is, the period of coverage for the assistance is April 1st through September 30th of this year. Basically, an employer or plan to whom COBRA premiums are payable is entitled to a tax credit for the amount of the premium assistance. So the former employee does not pay a premium between April 1st and September 30th. And then you get a tax credit for the amount of the tax credit, which is what the premium assistance is. So if you have someone who qualifies, this could be a great deal for both employer and employee. Premium assistance provisions apply to all group health plans sponsored by private sector employers or employee organizations, including unions subject to the COBRA rules under the ERISA. They also apply to plans sponsored by state or local governments subject to the continuation provisions under the Public Health Service Act. It's also available for group health insurance required under state mini COBRA laws. Now, I don't have my friend Tara from our benefits department on with me today, so hopefully I can answer your questions accurately. If not, I will definitely send them along to her. Okay, so who is eligible? So here's kind of the tricky thing. So an assistance eligible individual is somebody who has lost coverage due to an involuntary termination or reduction in hours on or after October 1st, 2019, and who would otherwise therefore be eligible during the time frame between April 1st and September 30th of this year, which we refer to as the period of coverage, including individuals who lose coverage during this April 1st to September 30th period due to an involuntary termination of employment or because of a reduction in hours. Also, one is eligible if they had lost coverage and did not elect COBRA, but would otherwise have been eligible for the premium subsidy during this period of coverage, which again is April 1st through September 30th of this year. And then one who elected and terminated coverage prior to April 1st and who would otherwise be eligible for the premium subsidy. So basically, if somebody didn't elect COBRA, but they still would have qualified, they're still eligible, or if they did elect and then terminated prior to April 1st and still need coverage. Now, that said, these are the people who are not eligible. So if someone gets another job and is therefore eligible for another group health plan, or through a spouse's plan or Medicare, then they don't get the premium assistance through this program. Note that if a person has individual health insurance coverage, such as a plan through the health insurance marketplace or through Medicaid, they may be eligible for premium assistance. However, if you elect to enroll in COBRA continuation coverage with premium assistance, you will no longer be eligible for a premium tax credit, advanced payments of the premium tax credit, or the health insurance tax credit for your health coverage during that period. So that's what they're saying there essentially is you can't double dip. And the note here, if the employee's termination of employment was for gross misconduct, or if they voluntarily separated or reduced their hours, you cannot participate in this program. So that's an important distinction. And again, it can last, the max it can last is April 1st to September 30th until that person becomes eligible for another group health plan, or if they reach the end of their maximum COBRA continuation coverage period, which is generally 18 months from the day the employee was terminated or had a reduction in hours. Okay, and then here's how it's provided. So basically the employee does not have to pay any premium for the period of coverage, April 1st to December 30th. The premium is reimbursed directly to the employer, plan administrator, or insurance company through a COBRA premium assistance tax credit. Employers will obtain the subsidy through a payroll tax credit against your quarterly taxes. If the credit exceeds the amount of payroll taxes due, the credit would be refundable when employers submit Form 941, their quarterly tax return. The credit could also be advanced under rules that will be set by the Treasury Department, which I'll be honest, and I'm not really sure what those rules are right now. So, but this is what labor is saying. All of this information is from the Department of Labor. Okay, so you probably, if you have a COBRA administrator or other type of third party, they've probably already reached out to you about any assistance eligible individuals. They're supposed to do that probably. They should have done it a lot earlier, but certainly by now, because the deadline to send notices to those individuals is May 31st. So Dominion Payroll doesn't determine who those individuals are. You'll need to do that with your benefits administrator, your plan provider. I know people who have iSolve benefits, they've been getting emails, and there's a page in the portal where you can go in and confirm or deny that Kevin Wilson and Leslie Bruno are eligible for COBRA. They have to meet the conditions. We were involuntarily terminated, etc. Once you figure out that Kevin and Leslie are eligible, that's when you would contact us and let us know so that we can apply the tax credits. If you don't have a COBRA admin service, we can recommend one for you. Just email us and we'll help you out. I'm not trying to be salesy, but I do know that that's a pretty reasonable option and for a service that you might not want to have to deal with. So that is COBRA. All right, I know we're bumping up against 12 o'clock here, but I'm going to go over the Virginia Overtime Wage Act really quickly. Although, let me check our questions. I have a couple here. All right, Anonymous says, if we have had an employee use vacation when recovering from the vaccine, can we go back and change that time to EPSL? Yes, if they used it on or after April 1st of this year. You would need to work with your payroll company to apply those retroactive tax credits, or you would run in the next payroll. When you run the next payroll, you would apply it then. You would mark the number of hours they used to take the vaccine. You would mark those as ARPA paid leave, and then you get the tax credit. I would go ahead and download the form from our website though, and use that to document the use of the time, and then file that in the employees folder and keep it for 6 years. Todd says, as long as we're consistent though, can we not make it our standard that only employees that have been with us for 30 days or 240 hours are able to use ARPA sick time? Todd, that's really tricky. I do like your nod to consistency. I love that. But I'm not sure that you can do that. But I'm also not sure that you can't do that. I wish I knew the answer. I've had a lot of questions like that. People have asked, can we offer it through June 30th? Can we offer it to a certain population or a certain, tenured population? Like you're saying here, I think, it just depends. Like if someone's actually sick with COVID and you don't want them to be at the office, this is a great way for you to kill a couple birds with one stone, right? You're keeping your employees safe, you're getting a tax credit, the end. If it's for vaccine reasons, that's less of a health situation and more of sort of just a convenience morale issue. So Todd, I'll try and look into that. And if I find anything else more definitive, I'll let you know. And then Stephanie says, if they resign, then they are considered a voluntary termination and not an assistance eligible individual. Correct, Stephanie, there's some great resources on the Department of Labor website about that, but what they're saying is that it has to be an involuntary separation or reduction in hours. All right, the last thing, the Virginia Overtime Wage Act, which goes into effect July 1st. I know not all of you might be in Virginia, so I apologize for this, but I have been getting questions, so I thought I would do a quick overview. Okay, so first of all, this applies to non-exempt salaried employees only. This is not for people who are paid hourly and already or are part-time. These are for non-exempt salaried employees, so employees that are paid a set rate each week, but are still qualified for overtime. I know that sounds counterintuitive, but you can't, they're salaried employees who are non-exempt don't meet the job duties requirement for exemption. They might meet the salary requirement, but they don't meet the job duties requirement. And that requirement, people who are exempt typically need to have some sort of authority and autonomy, decision-making power, typically have direct reports, things of that nature. And so this category is really people who are just non-exempt, but salaried. So they have a set weekly wage. Until now, the federal Fair Labor Standards Act was the one that governed overtime pay for this category of employees, as with all other categories. And typically, as we all know, non-exempt employees receive time and a half for hours worked over 40 hours in a work week. This new law in Virginia departs from that federal law in 3 ways that could increase your liability, including they're going to change the calculation of the regular rate of pay for those non-exempt salaried employees. And we'll go through that in detail in just a second. It also changes the number of years that employees have to file lawsuits against you. It's now 3 years, and regardless of whether the violation was willful or not. So before, you got a little leniency if you weren't aware of what you were doing. Now this is saying it doesn't matter if you knew you were doing it or not. And then the third thing is admitting good faith defenses for employers, which is what I just talked about, and providing for potential triple damages and interest. So that would be back wages, penalties, attorney's fees, things like that. So that sounds like a lot of money. Might be worth it if you think you might have some people who fall into this category. Might be worth looking at your looking at their hours and doing some calculations and seeing what your risk is here. Okay, so let's talk about the math. So like I said, under the FLSA and the Virginia Overtime Wage Act, non-exempt employees are to be paid 1.5 times their regular rate of pay for hours worked more than 40 hours in a work week. So that's still the same. So the typical equation is, and you guys know this, the total weekly compensation divided by the total hours worked in a work week equals their regular rate of pay. As of July 1st, these non-exempt salaried employees, the regular rate of pay calculation will change. So it would be their total weekly compensation divided by 40 hours equals their regular rate of pay, regardless of how many hours they actually worked that week. So that has some implications. So if I make $1,000 a week, my rate of pay would be the same for those 40 hours. If I worked an additional 10 hours, my regular rate of pay is still calculated on those first 40 hours. And so let's show the math on that. So the old math, if a salaried employee makes $1,000 per week and worked 50 hours that week, they would have a regular rate of pay of $20 per hour, which is $1,000 divided by 50. Then overtime would be paid at $30 an hour, which is $20 or 1.5 times $20. Hopefully that makes sense. I'm no mathematician, so don't feel bad if this doesn't make sense to you, but essentially their straight time earnings would be $1,000. Their overtime earnings would be $300, and their total earnings for that week would be $1,300. That's the old math. And again, this is for salaried non-exempt employees. The new math as of July 1st is if I make $1,000 a week and I work 50 hours a week, that regular rate of pay is still calculated on the 40 hours a week. So my regular rate of pay is $25 an hour. $25 an hour times 1.5 is $37.50. So my straight time earnings would still be $1,000, but my overtime earnings would go up $75 because that rate of pay is higher. So before it was $20, now it's $25. So that might not be a lot, and that might not be a big deal. But if you do have a lot of employees in this category and they tend to work a lot of overtime, you might want to go ahead and do the math on that and maybe work with an attorney and see. I don't recommend just categorically making everybody exempt, because you need to make sure that they are truly able to be classified as exempt, because that also can get you in some hot water. The majority of the news releases I get from the Department of Labor is about companies who are fined for not paying overtime correctly. And so you definitely don't want to just categorically say, okay, everyone's exempt, so I don't have to deal with this. You need to look at their job description and the Department of Labor's exemption sort of rules before making that decision. And then also look at the hours that these people are working. Maybe there's some changes you can make there. You could make them non-exempt hourly, which means they no longer have a salary, they have an hourly rate. That would kind of get you around this change. Just depends on what the budget impact is for you. Okay, so the statute of limitations has changed. Under the FLSA, suits must be filed within 2 years or within 3 years if the employee can prove that the violation was willful. In Virginia now, as of July 1st, all employees have 3 years to file suit, regardless of whether or not the violation was willful. Employees can recover back wages for that 3-year period. So that can add up. It sounds scary. I'm sure all of you are in compliance and don't have to worry about this, but I just wanted to put it out there that that has changed. And here's just another piece about the available remedies. This new act provides for the recovery of lost wages plus liquidated damages, but has no good faith exception for employers. If the court determines that the violation was knowing, then the employer may have to pay triple damages. The law requires the employer to pay pre-judgment interest at the rate of 8% from the date that wages were due, and if found liable, the employee's reasonable attorney's fees and costs. OIWA also allows employees to bring their cases as class action or collective actions. So they're serious about this, essentially, is what they're saying here. So yeah, if you think you might have be impacted by this, you might want to go ahead and take a look now. Okay. And we have hit 12 o'clock. We've gone past it. I am so sorry, guys, but we got through it. If you have any additional questions, please send them to questions@dominionpayroll.com, and then we will answer them there for you within a day or so. Kevin, anything to add or subtract or talk about for the future next week?
No, nothing to add right now. Great presentation today. I know there's a lot of info in there, but I know it's all really important for everybody that's out there running their businesses right now. So you certainly did the heavy lift today. So thanks for that, Leslie.
Well, it's a lot of information. And like I said, this will all be posted on our website on the COVID-19 page by close of business today. So you guys can download it, listen to me ramble on if you'd like, or just have the slides and use those for your reference. We're always happy to help. And thank you, Kevin, for being my wingman today. We appreciate it.
Of course.
All right, everybody, have a great Wednesday afternoon, and we will talk to you soon.